Hi everyone, it is Friday, June 7th. We're just after, well, it's about 10 minutes until the Forex close, so 4:50 here on the East Coast. Very big day for equities today. Dow, NASDAQ, S&P all up over 1.2%. Dow over 200 points, back above 15,200. The Dow back above 1640 after yesterday briefly dipping below 1600. So a very aggressive rally here for the S&P 500. We'll talk about the technical reasons behind that. From a fundamental perspective, today we had slightly better than expected non-farm payrolls reports coming out. The U.S. economy added 175,000 jobs against expectations of 167,000. Last month's print was revised downward, however. Unexpectedly, the labor rate, the unemployed rate, ticked up to 7.6% from 7.5% expected as the participation rate increased. So that's actually not as much bad news as you would think. The participation rate increasing is actually, to me at least, would consider that a very bullish sign for the U.S. economy. It shows that job hunters are a little bit more optimistic. More people are starting to get up, dust themselves off, and get back into the job market. So I really have no objection from a macroeconomic standpoint of seeing that unemployment rate increase, so long as it's a result of more people looking for jobs and not fewer jobs. We also had Canadian employment data out today. The Canadian government reported record-setting employment numbers. The Canadian economy gained 95,000 jobs last month, opposed to 16,000 expected, and the unemployment rate ticked down to 7.1% from 7.2%. So extraordinarily strong Canadian employment data. I believe it was record-setting, best of all, best ever type thing. So we're going to run through some setups we have for next week, some requests. So first, please take a moment, pause the recording, read the risk disclaimer, and then we'll jump to the charts. All right, so since I have it up, and because I just talked about Canadian employment numbers, let's take a look at $CAD. We do have this, what now in retrospect appears to be a choppy head and shoulders pattern here on the 4-hour chart, left, head, right. We broke down heavily from there. We did break back below this trend line area, which is where I was looking for support to hold. This 50% fib and that trend line held on a closing basis on the first test. I think that was yesterday. But that extraordinarily strong data that we had come out with the Canadian dollar really didn't give it much of a chance. 618 still holding, but we are trading now below these three key moving averages, 200, 50, 100, and they are starting to roll over a little bit. We'll jump out quickly to the daily chart. All right, you can see we touched this 100-day EMA and it bounced from there. If we can regain this 50-day EMA, I continue to like $CAD for new highs. Again, we're holding a major 618 fib, so we could easily see a rally up towards 104.50, but we do need to regain this 50-day EMA here, currently 102.20. Dollar Swiss I had a request for. I don't like Swissy pairs. I haven't liked them for a while. I will continue to not like them. But we do have a potential double bottom here. Moving averages have not been super helpful on this lately. We've kind of just been, they've been fairly steady, and we've been ranging in between the two of them. I don't particularly like that we failed to hold any of these fib supports and that we've just crashed lower here. But I don't like being short, or I don't like being long the Swissy against anything. So I don't like being short dollar Swiss because Euro Swiss. All right, good day, a really good day for Euro Swiss. I don't like, because I know that the S&B wants the Swissy to be weaker. I don't feel like fighting them on that. Very strong day for Euro Swiss if that's a pair that you trade. Clear bullish engulfing. Held the 100-day EMA here twice now on a closing basis, so could be poised for higher prices if, again, you trade Swissy pairs, which I do not. Euro dollar, all right, I've been talking about Euro dollar forever. My targets were 132. We exceeded 132, touched 133. So the question now becomes, now what? And I got to be honest and say I'm not 100% sure what I want to do with Euro dollar here. So we haven't quite touched that 618% fib, so you can still create a bearish case off of that. Still trading below that fib. We are now holding this horizontal support region, though. It would be not surprising to me to see a flag sort of develop above there. We break out higher, touch one more high before then possibly reversing. But really, until we break down below this horizontal support, I'm wary. Furthermore, this moving average cluster is now obviously going to be support. That's right above 130, so keep your eye on that. A little less confident about shorts as long as we're above this moving average cluster. So sort of keep your eye on that going forward. Do look, though, for some consolidation before another move higher. That would be a very nice setup. I think that could easily get us up to those 137 highs, where then bears could start to make an argument again. Pound dollar. Okay, pound dollar. Equally unclear here. We did break above this retest, almost touched 157 before falling back. The clearest setup that I have would be a pullback down to this area before higher. Also, any sort of consolidation here could lead to a breakout. Probably have to get rid of this line. Doesn't really do us any good anymore. Moving averages, we're trading at the 200, above the 100, above the 50. They're starting to turn up a little bit. So we could be in for some additional pound strength. If terms of fib levels that you want to keep an eye on. Alright, so this is the 50% fib, so that's actually worth noting. We've now held it on a closing basis for 2 days in a row. And we also held it back here with that first initial turnover. So this is actually kind of an interesting... pound's in an interesting place here. So we rolled over here at the 50, but we couldn't make a new low. Alright, so we couldn't make a new low, so that sort of weakens this 50% fib to me, I think. I think that may be the reason we've held there these past 2 days, but I do eventually think that we may break above that, maybe test this 158 figure, that 618% fib. Time-wise, I gotta hurry. Pound, wow. Okay, so I haven't looked at the yen pairs lately, hence the wow. We broke down nicely from this. If you got in on that, great. You would have, hopefully then you took profits on about 400, 300 pip move lower before a complete sharp reversal on what would I assume would be the back of a dollar-yen rally, right? So, pound yen. Keep your eye really right next week, right here at this 152 support resistance area. This is a big resistance area. But man, if you want to sell yen pairs with a candle, with a daily candle like this, you're a braver man than I. I would rather wait for a little bit more clarity before I try to get involved on this. Ditto with euro yen, really. I mean, there is resistance here. Let's okay. So that resistance comes in 129.90. Again, if you want to fade a daily candle like this, that's your business. Not my favorite play. Interesting. All right, so here's actually an interesting setup. I noted that we have the possibility for head and shoulders here, left head now, right. We broke down, but we really didn't break down in a way that invalidated that potential setup. It just requires me to draw the lines a little bit differently. More like this, then. Alright, so that is one thing that you could keep in mind. 100, again, should be resistance, 250 pips higher. If you want to try to get in on a move up to there, that could be a good opportunity. Alright, last but not least, I want to take a quick look at ES, E-mini futures. I tweeted this, mentioned in the chat room. I warned people that to not get super excited about this break below this 50-day EMA. I was watching CNBC. They were real excited about it. That's never a good sign if that's your position. So we broke briefly below 1600, and you can see it. And then we just failed to close the day higher. Complete reversal candle off this 50-day EMA. Bears failed. They had their chance. We were below 1600. They just needed to close it, and we would have seen 1560 easily. Couldn't do it, and today we rocketed higher, and now I suspect tomorrow we see a breakout and possibly a move up to new highs. So I do think that the S&P is very well poised to consider significantly higher here in the next 2 to 3 days. Again, long term, I'm still bearish equities, or at least extraordinarily cautious about being long, but I would be picking my spots for equity longs over the next 2 days. You can see we also held this 50% fib, which to me, again, suggests a move back above 1700, or for the first time, above 1700. All right, I hope that's helpful. Enjoy your weekend, everyone, and I will talk to you soon.